Any reason why, Adetola, the market sentiment has turned today? We're seeing the market booking gains when yesterday we did see some losses, just as we saw across the globe.
Well, obviously, today's trading session reflects sentiments on in the Nigerian equity market of what investors are thinking. In our analysis, we observed that the 28,000 mark is obviously the resistance level of the stock exchange since the outset of the second quarter of the year. Today, trading opened on a very bullish note, such that the all-share index had gained up to about 100 basis points. However, towards the end of the trading session today, sentiments reversed, and we saw the index lose some of the gains recorded earlier in the day to close at about 19 basis points on the day. We equally observed increase in trading in three banks, namely GT Bank, First Bank, and Access Bank. What we have also noticed is that contrary to what we had in the first quarter of the year, where although the all-share index was gaining rapidly, trading fundamentals still remain weak in terms of volume and value of trades done per day. We observed that lately, volume of trades has been increasing significantly, such that we are now a little bit closer to the kind of value of trades that were recorded in 2007, 2008.
So what do you read into that? Can we begin then to say that we're beginning to see some of the big institutional investors coming back into the market, and therefore that being a reflection of increasing confidence in the markets?
Well, indeed, institutional investors are indeed returning to the equity market. I must say that we have observed that they have indeed returned earlier. But what we've also noticed is that Nigerian companies still continue to pay dividends and issue bonus shares, regardless of the drop in profitability and revenues that they've been recording. While it's obvious that the financial sector has suffered a lot of decline in cash flows and revenues as a result of the cleansing that happened last year, we noticed that the real sector, which is obviously been the darling of investors so far in this year, companies in this sphere of the market continue to issue dividends and pay bonus and continue to dilute investors and shareholders' interest in the companies. And we feel strongly about this in the sense that some of these companies have raised equity over the last few years, and we would have loved to see a situation where companies will retain more cash for growth going forward, rather than issue bonus shares that would dilute shareholders and pay dividends with a very low retention ratio, such that the growth rates of these companies are quite low.
I must say it's something that has surprised me, and it's something that I've been thinking about, because we saw all of these banks coming up with bonus shares, but I thought perhaps it was something that was peculiar to Nigeria. So there is unhappiness there. But let's talk about the results that we also coming out today, as Chris read in the news. First Bank Monument coming up with 2009 pre-tax profit down 82%. So the economy, as we saw last year, is not still in a good shape, and clearly the results are reflecting that, and yet we still see money coming into the market. Are perhaps investors looking a year ahead and looking at the good picture that is coming up with economic growth accelerating?
Well, that is indeed true. However, we must mention here that one of the key reasons why we continue to see investors going back to the equity market in Nigeria is principally because we do not have viable alternative investment outlets in the country, which is why several operators have been looking to ensure that we kick off the corporate side of the bond market. Looking at the example of the federal government bond market, it has started in 2004 with the issuance of the first 3-year bond by Nigerian federal government. Today we're looking at the Debt Management Office issuing 20-year paper into the market. So we are equally looking to ensure that the corporate side of the bond market kicks off, such that investors can actually take investment decisions by investing in good corporates, or maybe not listed, but that have good fundamentals that are worthy of investment. Such alternative outlets will ensure that we see investors allocating their capital appropriately, i.e. to ensure capital gains by investing in the capital market and investing for fixed returns in the fixed income markets.
Yeah, that's going to be interesting because today we saw the inflation numbers coming out. I don't know if you've had a chance to look at those numbers. I'm just looking at them now, and they show inflation accelerating to 12.5% year-on-year in April from 11.8%. At what point do you think are we likely to see the central bank coming in perhaps and hiking rates and therefore perhaps even increasing the potential returns from the bond market?
From all indications, the central bank is not looking to tackle inflation rate at present. I guess it's a trade-off between inflation and low interest rates. What the country needs right now actually is for us to be able to borrow at low interest rates to be able to accelerate development, especially in the infrastructural, given the infrastructural deficit in the Nigerian economy. We can see at the 20-year federal government bond trading at 7 plus 8% or thereabouts. We would also love to see a situation where corporates would be able to borrow or access long-term money such that we could actually finance viable projects and grow the country without paying so much attention to the oil revenues that we have in the country. Now, if you look at the last Monetary Policy Committee meeting of the central bank, the monetary policy rate, which is the benchmark rate in the economy, was held stable at 6%. We had expected that it would be dropped for the same reason we mentioned, the trade-off between inflation and low interest rate, because at this point we expect that the real sector, the real manufacturers in the economy should be able to borrow at single digits so that we can actually have an accelerated growth of the Nigerian economy.
Adetola, unfortunately, we have to leave it there. Let's have this conversation another day. That's Adetola Odukoya. He's Vice President of Dunn Lorren Merrifield, and he was talking to us there from Lagos.